Bitcoin has entered uncharted and never before seen territory, and whatever happens next will be historical. Whether this is a nasty detour or deception hidden in plain sight remains to be seen. Yet amidst the confusion and FUD, there are high-level swing opportunities to be exploited in full. Over the last few weeks, Bitcoin and the crypto space have been precarious in an unparalleled and never before seen way. And when the battlefield is foggy enough to cloud your vision, it goes against any sound strategy and gaming theory to waste precious ammunition by firing at random. You rather wait patiently until the fog scatters and you see the target once again. And this, in combination with my being careful about what I say, is the very reason why I've kept rather quiet lately. Instead, I've spent a lot of time and effort in trying to assess the situation and get my head around what's going on in the Bitcoin and crypto space. And I have made two absolutely critical observations which I will present in this episode. Two technical observations that explain the overall confusion going on. But in the meantime, and despite the suspicion-warranted FUD, there are and will be good risk-to-reward swing spot opportunities that we will seek to exploit in our favor. And in this episode, we'll take a good look at Cardano and Ethereum, both of which display clear technical strength compared to that of Bitcoin. But before that, not financial advice. Everything you hear and see in this episode is my own thoughts and conclusions only. And if you appreciate this analysis and if it helps you better understand what's going on in the Bitcoin and crypto arena, then please return the favor by hitting the like and subscribe buttons. And more importantly, share this episode with others who may benefit from hearing this too. Without further ado, let's get technical. Whatever Bitcoin ultimately decides to do will be historical, for everything that has played out over the last few weeks is technically unprecedented. First of all, it's the first time ever throughout the markup phase that Bitcoin has broken below its weekly 21 moving average. The same goes for the daily EMA 200 and even the EMA 100, of which the latter has immediately recovered with V-shaped formations whenever compromised. The exact same principle as the EMA 100 does apply to the EMA ribbons and Ichimoku on the daily. This phenomena we've discussed in full throughout this 2021 Bitcoin series, so I won't dwell any further on it for now. In this sense, even if Bitcoin were to recover and find its way towards new all-time highs, which I still think is in the cards, it will have taken a never-before-seen detour, one that sure confuses us and tells us it's heading a completely different way. To some extent, this makes perfect sense, as it should lie in the very nature of high-yielding equities like Bitcoin to constantly find ways to make us pay for our gains, and if nothing else, then with stress and anxiety. If the markup were to continue, this turn of events gives us strong cause to believe that this whole playout is similar to that of 2013, which in fact had two back-to-back markup phases. The other alternative is that this was it, that a long markdown and bear market is to follow, perhaps for a few years to come. Now, I don't personally believe this to be the case at all, but we'd be fools to ever discard any possibility entirely. For it is our job as technicians to assess and understand the natural course of events and not to cherry pick whatever we want to be the reality. And for more on this very important topic, please watch the Idealistic versus Realistic Traders episode. Now, the way this would be unique and unprecedented is because a normal markup has taken Bitcoin anywhere from 20 to 100 times higher than its previous all-time highs. This time, however, should it be the rare exception, the markup would have managed only 3x, as in nothing. Secondly, each previous Bitcoin top has been characterized by parabolic moves followed by pointed tops, and not by 3 months long Ayers Rock type of tops, or a Bart Simpson silhouette. In this sense, whether this is it or just a weird correctional pause, we have never seen anything like it before. This calls for caution in my opinion, as we're stuck in an intimidating no man's land without a map. Now, despite the mid to long-term picture being blurry to say the least, there are still ways to exploit short-term opportunities, and that's exactly what we'll look into next. Bitcoin has broken out of its symmetrical triangle, yet this does by no account mean that I'm back to being bullish, not even if it were to pass above that $42,000 to $42,500 zone that we've discussed in a recent episode. Sure, it would be bullish in the short term, and it could probably propel Bitcoin up to the late $40,000 range, or even for a retest of $50,000 or so, but I don't think it would pave the way towards new all-time highs just yet. As we know, formations like this symmetrical triangle are technically biased towards continuations. This means that this statistically should lead to further downside. But just because it's bearish by nature doesn't mean it will just plunge right down. No, that would be too obvious. What's more likely in my opinion is something like the symmetrical triangle behavior of January this year, during which Bitcoin made a fake out downwards from this bullish continuation triangle, after which it then rapidly shot up, thus tricking everybody. In this sense, I will tread carefully until the technical landscape has cleared up and is less prone to trickster moves. For as we know, any fake out tends to move aggressively in the opposite direction. With that said, there are opportunities that I seek to exploit. Cardano, for example, has just broken out of its clear bullish continuation triangle versus that of Bitcoin. Again, do note that this is not Cardano versus US dollars, but Cardano versus the price of Bitcoin. Technically, it looks really strong, and I expect Cardano to outperform that of Bitcoin over the upcoming weeks. And if we add that layer onto Cardano itself, it shows inherently more strength versus the US dollar than does Bitcoin. Sure, this right here, especially the 60% free fall the other week, tells me it's not a gold brick road towards new all-time highs. But based on this chart alone and the recent triangle outbreak, it should technically be potent enough to at least test its previous all-time high. As announced on Twitter, I did position myself in Cardano again, as it looks statistically safe and the risk to reward is strong. Yet based on my suspicions of Bitcoin not being ready on the downside, or at least not being ready in a sideways range, I will look to release most or all of my Cardano at or near its all-time high. Of course, given that the technical map hasn't changed until that point. My Cardano trade is a textbook swing position and with a mouth-watering risk to reward, one with a stop loss set at any closing back into the triangle. This will still grant me a 6 or 7 to 1 risk to reward trade, which is certainly the type of spots you cannot resist. And equally so, if Ethereum were to break above its ascending triangle, I will position myself for that too. However, with that said, I will keep an eye on the Ethereum versus Bitcoin development, as the 786 level could very well produce a triangle formation of its own. And such formation would be of high interest to us, as it would be a bullish continuation pattern. And that on its own tells us that the alt season may continue, and where further Ethereum and Cardano markups are to be expected, either at the expense of a more slowly uptrending Bitcoin, or more likely at the expense of Bitcoin's sideways and range-bound moves. This would make perfect sense technically. However, a downwards break from this triangle could also mean that the fun is over for now, and that Bitcoin is bound for a steep leg down towards the low to mid 20,000, and that Ethereum and alts in general are bound to suffer greatly. If there is any chart you may want to keep an eye on, it is this one, or else the Bitcoin dominance chart, which should tell a similar story. On a final note, I will personally treat the upcoming few weeks with the utmost suspicion, but will regardless look to exploit short-term swing opportunities with strong risk to reward offers. That was all for now. Thank you and goodbye.